Okay, are you rolling in the hay yet? Well, we have a lot of charts to go through. Hopefully we can make some hay with it all. Let's go.
Good day, everybody. It's Greg Schnell, and I am here with the weekly market review for October the 12th, 2019. Lots to chat about this week. I've titled it Skipping Stones because we were literally waiting for a big announcement out of the China-US trade discussions and didn't really get what we wanted to, so the market kind of gave it back on Friday afternoon. We're going to talk about that in a bit. To find my blogs, StockCharts.com, go to the Articles tab. You can find the drop-down menu on the right. Canadian Technician, Don't Ignore This Chart, and Chart Watchers. Please hit subscribe at the bottom. And if you're interested in getting any of those direct into your email. And also I'm signing up people at gregschnell.com. So if you'd like to get all of my commentary, so not just on the stock chart site, but on everything else, you're more than welcome to go over there, enter your email address, and I'll have a running blog there for all of the sites that I'm writing on. So contact information. You can always reach me, Greg S. at StockCharts, on Twitter at Schnell Investor, and of course my website, gregschnell.com, and you could send an email over there if you needed to at info@gregschnell.com. And here we are with October the 19th, 1 week away, and we're doing the Canada's Technical Day, and there's an online offering for $35 Canadian. So if you're interested, there's 5 good speakers there, and I think you'll find, 2 or 3 of them you probably haven't heard before. So some unique content, and I think that you might find that pretty beneficial. If you do subscribe and can't make it during the day, you can pay the money, and then we'll have a recording for you, and you'll be able to go in and get the recording. For the agenda today, I want to do a thorough review of the currencies. There's some real interesting stuff going on there, and I want to focus in on that area. It's that US dollar right around 100 here that we have to watch for. And again, we'll be talking about how my newsletter is going to change. So this video will change, and how I approach the market, and the difference between my subscription service and the stock chart service. So I want to talk through that and show you what the differences might be, just so you're aware. And then options expiration and Fed meetings. I want to cover that off because I think it's really important and often overlooked, and we're coming into an options expiration on Friday, so that is another thing that I think we need to put on our radar and try to be aware of. Lastly, we have REITs, and I want to do a big encompassing group on the REITs because I feel that if the interest rates are going to roll over, REITs are going to go out of favor. But the one thing that, if you're not set up, it's very hard to see that. So we want to get a real solid review of how you would create a list of REITs. From that list of REITs, how you could sort it, save it, and then work with it, and then use that to help you with your timing and entries on REITs. So if you're a dividend style investor, you can always come back to this video and make sure that you've got some ideas on how to address the REIT market and make sure you're getting gains and not just you've got a declining capital but still getting paid. That doesn't work. So making a list, sorting a list, saving the sort order, how to analyze the list, or how I might analyze the list, and hopefully all of those things will help you. And then the other example would be sell signals and buy signals, of course. So let's jump into the charts. I want to talk thoroughly about the currencies, but we're going to start with the options expiration and Fed meetings just because that's what's coming next. And I get the feel that there's a change in the wind, and I'm not sure. Whoops, I think I hit the wrong one there. Not sure which one, what will be next. Okay, so just up here at the top, this is all of the options expirations, and every blue options expiration is a quadruple witching, where we have more than just the regular monthly option expiration. I don't want to get into all of that. You can Google all of the different types of contracts that expire on quadruple witching. But the big thing that we want to talk about here is a lot of times back here We had a quadruple witching that kind of marked the top, and then it marked the bottom in December there. And then we rallied up, and we visited this level multiple times. As you can see, just kept coming back to it. The other thing that we see in this case is it was right between the dips here, and then we had the Fed meeting and options expiration meeting both showing up here, and that marked the top. We've come down, tested the 200-day moving average, tried to rally up, and now we had this shooting star for the results on Friday from the China trade meeting. And I think probably, I know one thing that I'm very uncomfortable with is that at the end of all of 2 days of meetings, the buildup that we've had for months and weeks for everything to kind of culminate on this date, to not even have a one-pager of what we got accomplished, it just seemed like there was a lot of talk, but not a lot of finality to what was discussed. And I know they said it'll take 2 to 3 weeks to write out the language. There wasn't even a clue to me of what was going to be written up. So it was a lot of, I felt like we hadn't gained much by the end of it. And I think that's why the market gave you this kind of a candle. We shot up on expectations that things were finally going to get done. We had some meetings in the Oval Office, but nothing got done, or nothing got finalized. It might have got started, but nothing got finalized. And I think for most of, let me just say, from my perspective, I thought we had started a long time ago. So to say, we had made 1/3, or, we were breaking this down into parts and we're through 1/3, there was still no indication of what 1/3 was. And so I found that quite difficult to absorb, as that was going to be good enough for the market. So I'm a little bit worried about Monday, because we really don't have, this candle says a shooting star is basically you jump up on hype and then you lose all your momentum and are falling. That's what it feels like to me. And so I was not, in the morning, I think if you listen to my Friday buzz, there was lots of things that were kicking off. Semis were breaking out to new highs. Financials were starting to roar. Interest rates yields were rising. Prices were falling on bonds. There was a lot of action setting up for a relatively big follow-through day where we start to launch, and we just didn't get that. So even though we closed up significantly, my big uncomfortableness was that we didn't have any closure of any part of any of the China deal. So we don't know exactly what we can look forward to. There were some ag announcements, but those ag announcements seem to have been the same ag announcements we've already heard. So I didn't get a feeling that there was anything new there either. And I'm not trying to dissuade it in any way. I want this thing to succeed. I think the bigger issue for the market was we didn't have anything that we could tangibly go home with and say we now have a deal. So that was probably one of the hard things. So I'm a little uncomfortable with how Monday, Tuesday work out. And I will say that in my Schnell Strength Index behind the scenes, all of my data from there either held steady or continued to deteriorate. So I didn't get anything concrete that was saying we're moving up. Now, the one thing that I will say looked really promising was the semiconductors broke out. Lots of them were building bases and were trying to break out. And I also saw a lot of the financials start to move. There's been some really nice price action. So those two groups were interesting. We started to see a little bit of an uptick in commodities, and I think that was on the back of the hopes of the China deal starting to get going. We saw emerging markets start to pick up, but we didn't get any real meat. And so that is a real concern. I don't know if the market will stabilize until options expiration, or if it'll fall into options expiration and then try to rally out. But the big concern I have is we didn't get the closure that we needed on Friday afternoon. Okay, so here's the Fed meetings, and as you can see, so the options expiration was on this bar right here, and the Fed meeting was 2 days before, and we literally made the top in between them. The put-call ratio plummeted on Friday and finished very, very low, which it doesn't necessarily mean it's a top, but you can see here was a Fed meeting where we had the put call ratio very low, and then all of a sudden it rolled right over from that low level. These low levels can mark a top. Don't always mark a top, but I think the bigger concern for me is I didn't get the signal here didn't kind of confirm this sort of reversal that we had. This continued to close significantly lower, and really at the lowest level going back to whatever, mid-July, something like that. With that, I would say I'm more uncertain as to market direction than usual, and the main thing that is causing that, I think, is the currency setups right now. I haven't covered them for a while, so I want to focus on those today and show you those relationships. The US dollar up around 100 is important, and then we also have emerging markets tried to get going today. Germany was the best performing country in the world, so we had lots of things like that that were starting to add up. Okay, let's go down and get into the currencies, and I'll show you why I think that's going to be important as we come forward. So here's emerging markets, just to show you what I mean here. Emerging markets are sitting right on this triangle and closed, surging up. It looks like it's trying to turn up to me right here on the full stochastic. This would be a nice breakout. And then what we see here is this big long downtrend going on for 2 years. And if all of a sudden, you think that the US market hasn't gone anywhere for almost 2 years, it's up a couple of percentage points. If we could break out to new highs, I think that it might take this chart to do that. And this is zoomed in on the emerging market, but you can see we finished literally right on the 40-week moving average over here. So it's the emerging market that I'm a little bit excited about, and usually that would break out if the US dollar started to top and roll over. So with the US dollar right at 100, lots of discussion around the currency agreement yesterday with China. All of those things adding up to make me stay focused on this, and we see we got a PPO signal turning up here to close out the week, and we have this downtrend that goes on for 4 or 5 months now, and it looks like it's starting to break out. That's the kind of thing that I'd like to see, and if emerging markets kicked off, that should normally be good or associated good with copper. So in order to really have conviction about the emerging markets, I think we need to be aware of what's going on the currencies. And so I want to literally dive in on the currency today and focus on that. So here we have the US dollar. We posted last week that we were up around 99 point something. And then this week we've pulled back again, and we're in this wedge, and this wedge just keeps extending out. And we haven't been able to pick a direction. I would call it chop with a slight grind higher. When we look at the momentum indicator down here, the PPO, what we see is these two converging trend lines. So you have an uptrend in momentum off this 2018 low or 2017 low, and then literally when we look at the US dollar, it bottomed right as the stock market made its final high, and then as it's been rising, the stock market hasn't really done a whole bunch. Now, the stock market hasn't gone down. Well, it's had some dips, but let's just put it on the chart here so everybody can see it. We'll fix the height a little bit higher. And the point we want to show here is that, here's when the currency bottomed, and the stock market, quite frankly, we've been trading right around this line. Even as early as September, we've been sitting here, and we briefly pulled back this week. This is just giving us the weekly closing high. If we put the bars on here, and show it that way, this surged to the high after a big run up. So while the dollar was falling, this surged up. And then we really haven't had much momentum since then. So if we got a change in the dollar, that would suggest that we get a change in the stock market probably. I'd be looking for that. So anyway, that's one of the reasons that I want to focus in on this US dollar today. Looking at a couple of different venues here. So this is Martin Pring's Special K. And this Special K number has a lot of moving averages in it. And it's basically a big smoothing mechanism to try and get your trend. it hasn't, I mean, we've been gently trending up on the special K, but we recently broke back down below it, right in here. I'm going to extend this line over here now and just kind of put it down here because it looks like it might mean more this way than the previous way, but we also have a we also have a ceiling on this trend line right in here. So which way does this break? And normally this sort of pattern where it grinds higher eventually pops, and that's what I'd be looking for. It's not quite the wedge situation that I would envision. The wedge should have more fill down in here to be a proper bearish wedge where it keeps testing but making higher lows and then rolls over. In this case, it seems to be more of just a channel up and to the right, and we're near the top of the channel on this special K. So the one thing we've been watching a long time is this 97.5 level, and as you can see, we've spent the last 3 months above it. But the stock market hasn't really gone anywhere either. We've been kind of pinning sideways since May. So anyway, we fell from this 99.0 level and then have worked our way down, and now we closed at around 98 on Friday. All of that leads me to believe, it seems like a bit of exhaustion, but let's come down and test the bottom of the range and see what happens down there, and that should help commodities bounce a little bit in that move. Now, looking further here, here's the US dollar on a daily basis. And we have this uptrend line that's been going since June, and you can see that we broke down here, and we're sitting right on the 65-day moving average. I use that one for currencies, that 65 days, so I'm watching that one quite closely. But the bottom line is we're coming back to test that 98 breakout level, and maybe let's just grab that red line and move it up. So I want to take this. Just be aware of, of the potential for the US dollar to actually start rolling over here. And it did that in here. You can see we had kind of an uptrend going and then this move down. During that move down, that was quite bullish for some of the commodities. We started to see them rock. We're rolling over right at zero here. We've got kind of a lower high in momentum. So all of these things are adding up to make me be more concerned about the US dollar. So I'm really having trouble with the fact that this is going to, it doesn't look like it has any more legs higher for now. And so that would be a concern. There's one other trend line that you can draw on. Normally I don't focus on these dailies too much because they're so whippy, but the weekly, all of that work I was just drawing out there for the special K momentum and that kind of stuff. Again, it doesn't have a lot of upward thrust, so it does make you wonder if it's just going to roll over here. Anyway, we broke the PPO line on momentum this week at a lower high, so we've got some divergence. We had a higher high here in price and a lower high here on the momentum. And it looks to me like we're breaking down, and we're breaking down in price. Are we just going to come down to the 200-day and find support, which, has pretty much been holding for the last year, with the exception of late June? All of that concern or focus on the US dollar. If the US dollar is going to break here, that's one of the reasons that I would think we might get a shot at something different. So the emerging market starting to pick up suggests to me that perhaps this weakness in the US dollar is about to show. This is UUP, and again, if we ignore this low back here in June and July, we're pretty much right on trend. So will it bounce here? I mean, it's been a great trend line so far, but I think watching the dollar in the week coming up to see how it responds is going to give us more clues about whether or not we've got anything going. Looking at the euro, what we see here is the same sort of wedge pattern building, but it's the other way, and it's been downsloping for a while. And can it finally bounce off this lower level and start to turn higher, break above this big, long, call it 2-year trend line? Notice the tops are the same as when the US dollar bottomed. This is a pretty strong part of that US dollar basket, making up over 50%. So if this is going to start to surge here, that would be what we're looking for, is the euro to start to take off to the upside. On a On the daily basis here, this chart goes back so far. Let me just shrink up some of the data so it's not so squishy. But, we haven't done anything really in the last couple of months, and we're trying to get through this 65 period moving average on this chart too. So everything's trying to get going. The one thing I will say is look at the German stock market. It has been grinding sideways for 5 months. And on Friday, it was the best performer of the week. And it now is up to almost 3-month highs, 3-month closing highs. And it doesn't need much to get up a little bit more. And I think that would be new 52-week highs. Obviously, new 52-week highs is bullish, and we just saw that in France not too long ago. So perhaps Euro's got something going on here, and it's getting ready to start that rally. But the euro looks like it's trying to base here. The PPO has been grinding sideways and then starting to make a little bit of a higher high in here. Maybe we get some new momentum into the euro. The Swedish krona is what I usually look to help me, and on the week with the euro, and on the weekly, it is sitting down here in the bottom corner. And the only thing I would say positive that we could say is that it had an outside reversal, so it made a lower low, a higher high, and closed near the highs and above the prior week. That's pretty bullish. Now, can it follow through and start to take off? But we're still coming off the lower bar, so it's not like it's giving me the lowest bar. It's not like it's giving me any advance notice of trend change here. I have the momentum indicator rising here, and it's been testing this level for the last couple of weeks. The real question is, does it finally turn up here, or does it come down even further, and we get down to this big trend line that we've got that goes back 3 years? So I'm watching just the momentum trend here, but in the Swedish krona, it's usually a little more sensitive, and so what I was hoping to get out of it was some additional data, and so far it hasn't spilled its beans on which way it wants to go. So we got some news on Brexit this week, a little bit more positive news, and obviously this British pound responded with a big thrust. I've been noticing that the British pound usually needs some sort of a complex reversal. It doesn't kind of V-bottom in terms of momentum, but here we do have a big final down thrust off Boris Johnson taking over, and it's been working its way higher. This was a test of the prior low. Now we're making a series of higher lows, and with today's or this week's thrust, we're making a series of higher highs. That is bullish. And so we're about to come up to two things. One is this 65-week moving average, and the other is this downtrend line that's been in place here for over a year. And can we finally break out to the upside? So the pound with this big reversal bar looks like it might be one of the first to start getting going. And if we did any sort of horizontal line, well, let's call it 127.50. Let me just go here. One of the things that we'd be looking for is, this line seems to have been support and resistance. We're right at it. So there's lots of reasons to look to this area for resistance. If we break through, I think that's a pretty considerable trend change. It might be saying that something's going to happen in this Brexit environment. So here's the daily. And on the daily, we're right at the trend line. Turning up above zero, that's a pretty bullish place. And again, all of this is following on Boris Johnson taking over, so maybe there's some renewed optimism in the pound at this point. For the yen has been, it put in a big bar last week, an outside bar, and then had just a complete reversal this week where it made a lower high, lower low, closed at the lows or near the lows, and gold followed it down. So this is kind of, it's not a surprise that gold and yen moved together. The bigger surprise is that at this point in time, they're not differentiating much, and it looks to me, if the US dollar was to roll over normally, that would push the yen up. I think there's a bigger chance that the yen is actually ready to break down. It doesn't seem like it's had any power after it did break this big 6-year downtrend line. I thought this might take off, and so did gold, obviously. But it looks to me like it's ready to roll right back down again and come down and test this 90-cent level. Okay. On the daily chart, you can just see it's grinding into this zone here. Nothing really to look at. Let's go this is a zoomed in on the back end of the daily, but this is probably the most important thing to me is the last 4 months or 5 month trend line got broken on Friday. We did close much like the same as the shooting star we saw in the stock market, where this one in this case fell hard, bounced up and closed near the top. In the stock market, we jumped up, tested higher and closed near the bottom of the bar. So let's just see which way this wants to go. But without question, we did break this uptrend. We broke last month's low, so we're at 2.5 month lows, and it wouldn't take much to go to new 5 month lows here. Watching the yen very closely, and again, the yen, bonds, gold, they've all kind of matched each other for a little while here. For the Canadian dollar, crude tried to pick up, and Canadian dollar and crude typically follow each other, so that's what this brown line is. But the Canadian dollar is sitting right under a trend line here that it's been under for 2 years. That same trend line we saw in the euro and the US dollar. This one looks like it's ready to break as well, and maybe that's another sign commodities could start to kick up. What we see here is the PPO is about to grind higher and turn up from above zero. That would be very bullish, so we'd want to keep watching that. That was the daily. So Friday on that big surge, so commodities had a pretty good day, but also this is back above the 65-day moving average, and it looks to me like it wants to go after being held right around this horizontal support and resistance. Let's go into the Australian dollar, and what we see here, it's drilling into the bottom right-hand corner, trying to get going. It made a higher low and a higher high this week, but nothing really too crazy. I'd like to see this 2-year momentum trend line on the PPO break, and if we can get that, that would be good. Right now, we're stuck in this big giant downward channel, and it doesn't look very enthusiastic. I will say at this point we do have double divergence, so we have one divergent low here where the price was lower and this was higher. Now we have another where the price got even lower and this was even higher. So we're starting to get to the point that it looks to me like it does want to cycle up. Okay, last thing, just let's go grab the emerging market currency. And the reason for that is this should start to tick up too if commodities are going to tick up. And this is copper shown here in gold or in the orange color. And as this starts to run up, if we can get the emerging markets to start to break out, that's going to be a very powerful move that we should see for this currency. And as these currencies go up, again, this orange and the emerging market currencies ETF, they track each other pretty closely. So that's where I'd be looking for the change. Okay, so thanks for that. Now we're going to switch over and I'm going to jump right into the REITs. Okay, so thanks everybody. I want to cover off the REITs in detail today. What we want to end up with at the end is a chart list that you have all of the REITs in. If you're a dividend investor, that you could start to look to see what's performing well and how you can get that information into a chart list so that you can manage and work with REITs. To do that, we need to create a new list. And so I have this list already created, but what I want to do is help you create a list. And so we're going to work our way through it, and we're going to pick a different code basket here. So I'm just going to delete this list and we'll start a new one. Okay, so you get into this mode as edit mode. So let's say you're in a summary chart list and you want to build a new chart. You're going to go over here and you're just going to say, I want to build a new list. And in this case, we're going to call the list 0001 hyphen. We're going to put an R for REITs, and then we're going to put REITs, and we're going to name our new chart list that. So that's going to give us a place to put everything, and then what we want to do is upload things from a group. Now we have this situation here where I don't want to get the whole REIT sector. I want to get the individual, I don't want the whole real estate sector. I want just the REITs. And so in order to do that, we have to do it a little bit longer. We go in here and you can see this one says REIT, but then we have real estate holding and development and real estate services. Those are the ones we don't want in here. So in order for us to get that we're going to have to go grab these groups one at a time. And that's not that hard to do. We literally grab it and say add the chart. And now we do that same thing again. So we go back to the bottom, and at the bottom here, we're just going to go back and say from group, and we're going to get the second group. So while it's a little bit tedious, it's only going to take us a minute here to grab them all. And we're going to go down, grab the third one, and keep working. So industrial and office REITs. And the other thing that this is also going to be able to help us with once we get all of these stored into the same group is that we can go through and look and see if there's a specific type of REIT that is working better than the other types of REITs. And I think that can be helpful for a number of reasons. So as an example, industrial REITs have been one of the better performing areas of the market. And what we want to know is from that, is that going to continue? And if that was to start to fall away, then we should see it on this listing compared to the other REITs. So let's keep going. We got residential REITs here we're adding. Scroll back down to the bottom, say from a group, and then pick our second last one, retail REITs, and add it. And then scroll down to the bottom again and go from a group, and we're going to pick the seventh one here. And so specialty REITs. So now we've got them all added in here. And again, the way I did that was go from groups, and you can either pick an actual S&P 100 or whatever, some sort of sector. That's not what we wanted. We want to get the actual industry group lists right down to so we're only getting the REITs and not the rest of kind of the real estate divisions. Once we've chosen all that, it's going to create a list for us, and that list is shown up here. So we're going to scroll to the top. Once we get it into the top, we want to take this group and we want to switch it up. So now we're in summary mode, and you may or may not have the columns turned on. So I'm going to turn them off. And let's just say that, so far we have this as a background. So the symbol, the name, the close, the percent change, and this is based on a daily. Now you can always go look at this and just do one for 1 week or 1 month or whatever you'd like. And then you could sort on this change list if you wanted to. We're actually going to use the power of the chart, like the actual price action, to help us get our column, our sort order. So what we want to do is we want to go find the strongest charts, and the easiest way to do that is to use the SCTR. So for large groups, this is how we can find them. And we know that everything is within the same sector, so there's no real reason to load the sector information, but we can load the industry information. So now that we have that set up, what we want to do is take the SCTR ranking and sort it on that order. But then when we click the industry group next, it's going to put all the diversified REITs together, and everything with a high scooter ranking is going to be at the top, and everything with a low scooter ranking is going to, make a table or a sports ranking working its way down. And what a scooter ranking does, just in case you don't know, is it compares the price performance of one chart against the other charts and tries to pick the best one. Now we have to use some settings to try and evaluate that, to try and figure out which one of those are important. We spent a whole bunch of time to create this scooter ranking. So it's a StockCharts thing. But what you see here is all the diversified REITs are together, and these ones are either too small or not a large enough market cap that they don't have enough volume or market cap that they get a ranking. And then we go into the hotel and lodging REITs, and we see the same thing. Now, this is important. So what we see up here is this scooter ranking is at 93. This scooter ranking, the best in the group, is at 75. So clearly, this group is better than this group because it's outperforming 93% of the stocks in the overall market. And this is only outperforming, the best one is outperforming 74%. So when you're in between 25, so from down here to up there, really you're average. You're, let's call the market 50%. So if you're between 25 and 75, you're in the center group. What you want to be is an outperformer up at the top, or an underperformer that's terrible that's finally starting to get better. And when you see that, that can help you find nice places to enter as well. So then looking at industrial office REITs, these have been doing really, really well. And you can see there's a huge number of them here that have been outperforming the market in general. And, just think about that. We have a big, wide, diverse stock market, yet here's an industrial and office REIT. And this thing's just been, $25 to $37.50. It's up 50% in 1 year. Plus, you're getting dividend income. So this is really a nice way to go look at these and find them. Now, this is a pretty big group. And again, we've got a whole bunch here. Just because they don't have a scooter ranking doesn't mean they shouldn't be looked at. But I will say the one thing you typically want is a larger group, so that you can go in and trade in and out of it when you want to. Okay, so here's mortgage REITs, and again, this area's got a couple in the high 90s, so that's pretty good. It's got, about 10 above 75, so that's okay. It's got a bunch in the middle here, and then it drops right off. Residential REITs, the list isn't as long here, but there's some good ones. And you might want to choose to diversify and have some of each REIT. And then what you would do is you would pick kind of from 75 to 95, some of the top performing ones. And you just want to make sure that they're moving the way you want them to. And then when they start to fall off, then you rotate and you pick another one from the leadership position, or one that's very weak that's finally starting to improve, however your trading style works. And then retail REITs, this seems like such a risky area, yet look at how well some of these are doing. They've been performing really, really well. And very big group. So between all of that, we've quickly shown how to do that. Now, the problem is if we go and we just start to click on a chart and go in and start looking at these, the issue we're going to have is that these are now going to jump back into alphabetical order. So we need a way to sort these like we have, or keep the sort order like we have. And the way we do that, now that we're happy with our sort order, so we're sorted on scooter ranking, but we've broken it down within each type of REIT, we're going to say number in sorted order. And it's going to put a number on the front of this to hold this sort order so that we can go through it when we want to. So when we say OK, it's now added numbers over here. And these numbers, again, the idea behind them is to help us when we want to go look at the stocks all at once. So when we go look at 10 per page, it's not bringing them up alphabetically, it's bringing them up based on this sort order that we had placed them in. Now, I like to use weekly charts. This is a daily default that I have coming up. But the way to pick this chart, so we're going to click on this chart specifically, and you can set the style to whatever you like. If it's daily, that's great. If it's weekly, that's great. Go pick your style for charting. But for me, I like to use a weekly chart, and I just happen to have that template all set up. So we're going to take this chart, and we want to use it for all of the stocks in the list, or all of the ticker symbols in the list. And what we do is we scroll all the way to the bottom of this page, and right in here there's a button, Apply Style to All. And it's going to ask us a couple of questions. Do you want to apply them to all? And if the chart isn't set up to 5 years, which is my setting, do you want to change the period setting? And if you do, then it's going to take all of the annotations off the chart. So if you had trend lines or whatever. So once you set it up, it's not permanent. It will erase the data, but I mean, it's not that hard for us to go and put new trend lines back on things. But the idea now, instead of having those daily charts everywhere, when we go look at View All, and we want to see 10 per page, all of the charts will come up with what we want to see. And in particular on REITs, what I want to see is the yield. That's a very helpful component to say, do I want to own this? So if you're in it for investment, that's obviously one reason to be in REITs, but the other thing might be just safety of capital, right? And it's not always safe, so you have to stay in strong REITs in order to get there. But what would it take to make you sell this REIT? And my number one thing is that you want to make sure that you're in one of the best outperformers, and when it stops outperforming, you'd like to get out. And the reason is, if it's only going to make 1% and now it falls 10%, it's going to take you 5 years to make your money back. So once the stock has run up like this, or a ticker has run up like this, we want a reason to leave. And if we get a reason to leave, then we're going to go back and find a weaker one and cycle back into that. So we're going to spend the next few minutes here trying to rotate out of one and into the other, and I'll give you an idea of some ways to look at this. But first of all, let's go in and look just in general at the different types of REITs and what we see. So this one has a very high price at $550, but a really nice move this year from $400 to $550 while you're collecting a yield. And then as we move down, this one's been on fire. Literally at the beginning of the year, it turned off from $13 and went all the way to $25. So it's been a double. This would have been hard for me to hold through this wave in here, but this is quite an exceptionally looking, this is quite a good looking chart. And if one of the concerns I'd have here, see this big volume that we had this week, perhaps people are starting to leave REITs, and the reason they would leave them is if they thought interest rates were going to start turning. And so we might find some high volume candles on a lot of these, but we also have lower momentum. So as price has gone higher, the momentum has gotten weaker. And typically we see this divergence at major highs. In this case, we've got a huge volume spike telling us to at least be cautious. Looking at this Investors Real Estate Trust, this one, nice move from $60 to $75. It's got a 3.76% dividend yield, and that's based on this price right at the end here. So back in here when you were buying it, your yield would have been higher. And now you're getting, you've got this capital gain plus you've got the yield. So really a nice move. And what we'd want to watch for is when this starts to break down, then we'd want to leave and try and find something else. So here's one called Spirit, and it looks like it's just jogging sideways. It made all of its move all at once and has ground sideways, and there was huge volume on Friday again. If it doesn't really break out here, I would have trouble buying that. It tried to break out and pulled right back, so that volume bar looks suspicious on lower momentum. WP Carey and Company. So here we just have a nice consistent price move. Again, some people don't play these for the capital gains, but I think one of the things you can do technically is if you're in a strong REIT that's trending up, that's great. Now when it starts to grind sideways for a year and a half, do you really want to own it? And maybe you do, because you don't want to pay the dividend, or you don't want to pay a capital gain. The bigger issue is, if you want to just keep having all of your REITs going up, we want to see momentum improving. And as momentum picks up, that's great. Sometimes you can draw a simple trend line on these to try and make sure that you're outperforming. And when the outperforming stops, like as in here, so there's a trend line here, and you'd notice that it's starting to lose its outperformance, and it's starting to pull back on the full stochastic, falling below 80. There's some other clues that we could use, but as it starts to break down, then you take your profits and move over. In this case, it's grinding sideways. Full stochastic is staying above 80. It's all looking okay at this point. No real reason to leave. And we would just, again, draw a trend line under here. And if that starts to break, then we'd be a little more concerned. So here's Store Capital. Nice big 2-year uptrend. The full stochastic has kind of wobbled down into the 50 level a couple of times. In general, we've got a nice big uptrend here, and if that was going to start to break, then I'd probably want out. And you can see back here we had a nice big uptrend, and when that broke, that was just a good time to leave and, again, rotate into something else that was working then. So Lexington Core Properties, this one has broken out to new 5-year highs and is pushing right up against here. Nothing wrong with the chart. Everything on this chart is fine. A lot of these charts still look okay. Let's just take an example of drawing some trend lines on here. So what I want to do is, this is relative strength compared to the S&P 500. And when it's outperforming, big picture, I want to hold it. Now, there's a little trend line that could have been drawn. Let's do it the other way. that could have been drawn here, and that broke, and that could have whipped you out. Again, it didn't do anything for 4 months, so that might be frustrating enough for you to leave, or you're willing to hold through that. What you don't know is when it's going to break down meaningfully. So in this case, what I want to do is just use the general uptrend. These steep uptrends are not bad to follow, but in this case, keep turning this off. In this case, this uptrend sits here, and then it broke, and it didn't do anything for a long period of time. Now, the REIT was basically dead for 2 years, and you had a more difficult time owning it. What I would suggest is that when these are starting to grind sideways for a year, they're performing in line with the S&P 500, but they're not making much more money. So trying to find stuff in an uptrend can be difficult, but that's the hard part of investing. And what we want to do is find setups maybe when momentum goes above zero. That's an interesting place to look on these REITs. In this case, it just wobbled there for 6 months, so that doesn't make it much easier. But if you have a basket of these, you can make these work, and meanwhile, you're getting a 4% yield, so that's okay. Moving on, so that's just one example of a place where we could put a trend line and use it for clues to help us buy and sell, not necessarily the answer for buy and sell. In this case, we have an uptrend in price, so if relative strength started to break and the uptrend in price started to break, probably that would be enough to tell me to leave. Okay, let's go back and just put this back in the chart list, and then here's Armada Hoffler. I'm not familiar with this one, but it ground sideways for almost 2 years, and then recently here, beginning of the year, all of these REITs started to perform pretty well. And again, the scooter ranking starts to improve. This one has always been above 30, which is pretty good, but between 30 and 70, it's just performing in line. There's nothing really great going on. And then what we want to see is this gentle uptrend is just fine, where your REIT's growing in value and you're getting a yield. Okay, so here's Whitestone REIT, and again, all of these little boxes that are dropping down here, that's when the REIT pays out its dividend. So up here on this one, it's paying it out quarterly. On this one, it's paying it out monthly. That might be something you need to consider. In this case, we have a nice uptrend here, and all of a sudden it gaps down and gives you no chance to get out. That would be very difficult. You went from $13 to $10. You lost 30% on your REIT. This one pays an 8%, so it's paying you a little bit for that volatility. But when it fell down here, that's a pretty low level, and I'm sure the yield would have popped up at that point in time. But what you're watching for, this chart's got too much chop in it for me. That would be something that if I was trying to find smooth and steady income, it wouldn't work. This Gladstone commercial, this one is pretty smooth. I mean, there's very few outsized moves on this chart, and it just gives you a gentle climb up. That looks pretty good. If the trend line started to wane on this, so in this case, if I'm looking for, momentum trend, this is sitting pretty much right on it. I'm not sure I want to let it get much lower than this and start to roll over. And again, you've almost doubled your money. When this started to turn up at $15 and made it all the way up to $23 or $24, what is that? A $9 improvement, so about 60%. So with that big move, and again, it still fell down when the overall stock market pulled back October, November, December. Those pullbacks are going to happen in your REIT. You're still getting paid to hold them. You have to decide if you want to sell every time that thing starts to turn down, or how much of a trend you want to hold. But for me, what I would like to hold is these really big trends. And again, nothing wrong with putting a big long line on here. You are getting paid to wait. So if this was to start to break down, your scooter ranking probably starts to fail, some other clues, then again, happy to take the money off the table and rotate it into something that isn't working right now, or hasn't been working but might be starting to work. And so rather than looking at what things are topping, we're going to look at also some things that are kind of putting in bottoms, and perhaps we can get on board. Let's move back into the chart list. And so this is 200 charts to go through. Normally you wouldn't discuss each chart. I'm trying to give you an idea of what I would look for, why I would set up my chart this way. Let's talk a little bit about the indicators. So in this case, I've got the scooter ranking, which is like a sports ranking. You can see for the last 3 or 4 years, this has just performed in line with the S&P. Hasn't really done that much. It outperformed for, it was heading up here, but you can see it was kind of underperforming the S&P all through here. And then it really fell apart. If they're underperforming the S&P 500, that's not really something I want to own. So in this case, there's something interesting going on this chart right now, and let me just draw it out for you. So we're going to take this and just draw it here, and what you see is this trend line is starting to break. So a 4-year downtrend in relative strength is changing behavior for some reason. The price action on the stock is starting to break out. It hasn't really broken through prior highs here yet, but this is pretty interesting. Pays a 4% yield, and it looks like it's turning up well above zero. So that's usually a better place to get on board than trying to buy these deep discounts. You just don't know if these ones are going to work. But positive momentum is important, and so when this one is starting to turn up, then we can mark it green. It's starting to break above our trend line. Relative strength is starting to improve, and it's been grinding sideways for a few years. So maybe they found, something that's going to start to pay out a little bit better, and this is starting to tick up in momentum. So that's a good sign. Okay, let's go back and put it into the chart list that we were scrolling through. Again, this one's got a nice gentle uptrend. Nothing wrong with that. Its relative strength is kind of underperformed for the first few months here this year, and is starting to gently improve. Nothing really great, but it's trying to hold up. Okay, this one's grinding sideways for 5 years. I just don't even want to own it because there's no real trend ever. I'd rather that they trend down and then trend up, so you have a chance to get on board. In this case, this has done nothing for 6 months. Trending down. Until this downtrend in momentum changes, I don't really want to own it. Looking across here, this one, same thing, just too choppy and is not really doing much. Here's Crown Castle. This one pays a 3% yield. It's got a gentle upslope for the last 5 years. That's pretty tempting, but maybe you don't want to jump on it now because the relative strength seems like it's been on a run and is now starting to tilt down. Either wait for it to start to base here and turn back up, and you could use a daily chart. Your momentum's at some of the highest levels it's been at in 5 years, so I might want this to come all the way back down to zero, and that might give me a better place to start getting on board. We've got a couple hundred in this group, so as we work through them, we can see the difference. So we're still in diversified REITs, and looking at the charts, a lot of them are starting to just perform in line with the S&P 500. That's not really where I want to own them. So I like that one where it was starting to pick up in momentum. That would help. This one, boy, it's not very volatile. Price stays within a pretty narrow band every week, so that's really nice to own, easier to hold. Let's jump down into some of the other ones. And again, this one's been on an uptrend for 2 years. No reason to think it can't keep going. There is a downtrend here in momentum, and it's now started to turn out of that. I like that. This one, believe it or not, does not pay a yield for some reason, or I guess it just pays it once a year. So $2.50 last year, $3.50 this year. So because it doesn't pay it regularly, it's not on there. Looking at this one, it pays about $1 every quarter, and it's a $120 REIT, so it works out to about 3%. But it's not really gaining capital, but you're not losing capital either, and you're catching a 3% yield. This one had a nice move. Again, a lot of these made nice big moves in early January, and the way we would see that is everything starts to thrust up within their group here. There's a big long 2-year downtrend in momentum, and it starts to break out, and that's been a relatively nice place to get on board. Okay, so I've shown you different ways to sort it. Let's go back into the summary mode right at the top here. And one of the things that will happen, so you'll have this group going for a while, and you'll want to change these numbers. So how do we get rid of the numbers at the front? And the way we do that is we go into Edit List, And when we do that, it brings these all up. We're going to scroll to the bottom of the page, and then we're going to pick select all. And now we want to say remove the numbers here, and that's this button. Remove numbers from here. And so when we remove those numbers, it's going to get rid of them. And now we're going to go back, because you can't really sort on this screen, there's nothing to sort by. We could go back and we could sort, as an example, from highest to lowest, or we could reverse the scooter ranking, or we could sort on price, whatever you want to sort on. I'm going to just use this as an example. So whatever you select your sort to be, so we're going to have the highest prices in each group is the way we want to sort them. Again, you're going to go to the bottom of the page and hit this number in sorted order. So by doing all of that together as a group, what we want to see is the type of stocks that we've searched for first. And it could be, you could pick, I want to pick 1 month. And now we could go look and say, what's the biggest gainers over the last month, and go see if there's something there, as an example. And so this is based on percent change. If this was something you wanted, again, this is very easy to do. You go edit. We're going to scroll to the bottom of the page. This all takes like 30 seconds. Select all, get rid of the numbers, and delete them. Now we want to go back into summary mode, and we want to say, okay, show me the sort order. So I want to sort by the biggest changes over the last month, and I put that on here. And now that's going to be my new sort order. So in summary mode, go all the way to the bottom and hit this number in sorted order button, and now we can look at them that way. So this is not rigid. This is just helping you look at them in the order you'd like to see them. And again, this was the top changing REIT this week. We can go look and just see, yeah, this has been in a big downtrend and is starting to improve. Perhaps it's a nice place to get on board. Looks a little rough, but if that's the type of trade you'd like to make. Now, again, we can go view all, and that'll just put them in the order that we see them. This has been downtrending for years. I don't think I like it. This Toronto Corp, really nice uptrend, and it's had another good week here. A good one to put on your list for a pullback and see if there's an opportunity there. This American Finance Trust, this one just keeps working, so that's nice. Postal Realty just starting to break out of a base. This looks like a nice place to enter. Equinix, we already talked about this one. But as you go through the charts, the idea is to set them up so you can look at them. And in this case, I went and grabbed REITs. I could have grabbed semiconductors, and we could do the same thing. The whole goal of setting up a specific chart list is so you can go through and identify a group of stocks together and then work within that group to find things you'd like to invest in. So if this is your style, this might be the way you want to play it. With that, I hope I've explained why you would want a chart list, a specific list for REITs, how you could work with it. You could also scan on this list and sort by top dividend. We didn't get a chance to show you that today, but all of these things can work. So with that, if you have any more questions, you can always head over to gregschnell.com and send me a note at info@gregschnell.com, or go to gregs@stockcharts.com. Send me a note if you have further questions. With that, thank you for taking the time to join me. Hope you've learned lots on this video today. Thanks again. Bye-bye. This is a brief demo about how to scan for things that made a new high earlier in the week or the month. Rather than using a daily scan, which would say that it didn't make a new high today, by using a monthly scan, it'll get anything that was above this previous time period. So to do that, we go into technical scans and we create this month's high is greater than last month's maximum over the previous 12 months. I've also set it up with a close greater than $5. But when we run that scan, obviously it brings us our data, and what we can do is we can sort it into industry and sector, and Buckle was the current stock that I had up there, but look at how many apparel retailers are also hitting new highs in this current month. So this would lead you to believe that there's some strength in that sector.